Ladies and gentlemen, welcome to another episode of the Resource Insider Podcast. I'm your host, Jamie Keech, and we are broadcasting today from the Inventa Capital Studio. Now, today on the show, I had the chance to sit down with none other than the executive chairman of EMR Capital, Owen Hegarty. Owen has spent a lifetime in the mining space. He has done everything from build up junior exploration companies to multi-billion dollar producers. He's worked for majors, and now he is leading and growing a major private equity firm. And we get into it all in this podcast. We talk about his views on the future of the sector, which commodities he's focused on, how he chooses assets, what investors should be thinking about before allocating their own capital, many, many things. And if you even have a passing interest in the mining or commodity sector, if you are a technical person, if you are an investor, if you are an entrepreneur, you owe it to yourself to listen to this podcast. And I am certainly going to be listening to it at least one more time just to pick up some of the things that Owen has said. Very, very valuable. So without further ado, let me please introduce Owen Hegarty from EMR Capital. All right, Owen, welcome to the podcast today.
Thank you, Jamie. Lovely to be here.
Yeah, and for viewers at home, can you let us know where here is? Because I'm in Vancouver right now, and it's about 1 in the afternoon. Where are you?
Right now, I'm in Melbourne, sunny Melbourne, in Australia, Jamie.
So one of the goals of the podcast for 2021 has been to get a bigger presence of Australian mining people on here. We've overdone the Canadian space. We've got a few Americans in there as well, but we've barely touched the shores of Australia. So for a largely North If they haven't heard the name Owen Hegarty before, can you give us the sort of 15-second elevator pitch of who you are and what you do?
Okay, thank you, Jamie. We'll do that, and we still believe that Melbourne is the centre of the mining universe, of course, despite what you Canadians and Americans have to say from time to time. But we do have a very big conference down here that tries to rival PDAC, and it's called the Melbourne Mining Conference, and it's at the end of each year. So, and you will remember actually that mining in Australia pretty much started here in Victoria. So that's why still got a big background of mining here, including, the bigger groups, the BHPs and so on, have still got, headquarters pretty much down here in Melbourne. Okay, so my background, Jamie, very, very simple. I've been in the mining industry all of my working life, which now spans 40 to 50 years type of thing. I joined Rio Tinto, or it was called CRA in those days, straight from university. Why mining? Well, probably more to do with boys and toys and trucks and shovels type of thing. CRA was expanding. It had overseas connectivity. It was a growth company, and that's why I thought that would be. And they were looking for people in those days, looking for graduates. They'd come out to the universities and institutions and, with the flags and the banners and the showcase and so on and so forth. I mean, in a way, fairly easy to get a job at that time.
Yeah.
Right now, it's actually much, much, much tougher. So, I feel I was a bit lucky there. So I spent 24 years with Rio Tinto, all over the shop, you might say, all over the world, and multiple of their companies and commodities and countries. So very lucky to have that sort of career moving around there with CRA. Lovely people, lovely company and so on. They're a little bit sort of in the news at the moment, but, they've got a good assets and good people and good culture. So they certainly get through that. And Jamie, at the end of that, I was the CEO of a number of their businesses, and then decided to, given my Asian experience in particular, and also a little bit of a bent towards copper and gold, we decided to start our own business. Between myself and a few of our friends and supporters, we started a company called Oxiana, and we grew that company from a few $1 million to a few $1 billion here on the ASX. One of those overnight successes that took about 15 years or something like that. But it was Australia, Asia Pacific, copper, gold, development business. And I was the CEO of that for all of that length of time. So that was the second phase. And really, third phase has been here pretty much with EMR Capital, and we are a private equity mining group. Again, copper and gold is a focus, as well as in the bulk commodities we do potash, something that your Canadian people will be very familiar with, as well as met coal, also very familiar there in Canada. So those three phases. I do a few other bits and pieces of things, a few side shows from time to time. Jamie, I was a non-executive director and vice chairman of Fortescue Metals here in Australia. You will know them, the big iron ore people. And I'm, of course, again, when you've been in the industry for as long as me and still vertical, there are various government agencies and industry bodies who are looking for a bit of advice from time to time. So I do some of those things. But my main game and aim right now is EMR Capital.
Okay, that was a great intro, and I've got a bunch of pieces of paper in front of me full of questions and topics, and you basically touched on every one of those in here. So we're going to get into a bit more detail, but I want to start with a bit of a weird question. And I asked our mutual friend, Craig Parry, what I should ask you about, what I should touch on in this conversation. And he said, ask him this. I hear you live in seat 23B. Has COVID and the inability to fly left you essentially homeless? What does that question mean? Does that, if it means anything to you at all?
Well, I think it's to do obviously with the impact of COVID and what's happened. And one of the things that I worked with Craig for a long period of time and still do. He really is also an EMR founder. And of course, you're forever, as I say to people, you spend a sort of a third of your time doing your day job, a third of your time telling people about the company, and half of your time on an aeroplane type of thing. So you're forever doing that, whether it's visiting your existing operations, new businesses that you're looking to get into, or our investors, Jamie. And a lot of our investors, in fact, our investors sort of dominated in North America, domiciled there. So we have to spend a lot of time there, just bring them up to date, raising further funds and that type of thing. So we do spend a lot of time in the air, and COVID has cut us back a little bit there. We've been a bit interdicted there on the aeroplane travel type of thing. But we'll get that started. One of the things, of course, Jamie, about COVID, and you will hear this from everybody, is that it really has brought the future forward, particularly in your business, right? The whole communications business has now come at us so much faster. It's just phenomenal. There was a revolution going on, and we've now got another tier,
And, that's something I actually wanted to talk to you about, not particularly the communications business. And I feel for you, or I feel for me rather, on that one, because when we started, I was about one of the only mining podcasts that existed, and now there's about 100 of us. So it's birthed a lot of our competitors, which is good, and it's good for the space. But I've thought about this a lot in my own life and our own business. Do you think COVID is it a net loss for the mining industry in terms of the challenges that it's created for operation, or is it a net gain for the mining industry in terms of, obviously we've had a great run in gold over the last year. I think people are waking up heavily to the importance of metals, particularly battery metals and the metals associated with electrification. In a lot of ways, for me and my own investment portfolio, COVID has been very helpful with what's going on in the mining space. I know that is maybe sort of a controversial way to look at it, and it's caused a lot of problems around the world and across the board. But within the mining and metals sector, it seems like it's focused an attention on the importance and the essentiality of a lot of the metals that we're looking for. How has that played into your experience running a large private equity firm?
Yeah, well, absolutely right. So I couldn't agree more with you there in terms of bringing the future forward and putting into focus the whole metal business. Now, of course, in terms of net loss, it was only 12 months ago, Jamie, that we're all running around wondering what's going to happen next, scrambling to get back to our original destinations and various other things and wondering what was happening. Then we were talking with people about, well, what sort of a recovery is this going to be? Are we going to recover for a start? Is it going to be V-shaped, W-shaped, L-shaped, Nike whoosh shape, inverse square root shape recovery? What are we going to have? And so people were speculating on that. Well, 12 months later, we now know it's a V-shaped recovery. It's a bit of a jagged V-shaped recovery, but it's a recovery. So really, the market is actually telling us that we got through that. We're going to get through that, and we not only are we going to get through, we're going to come out the other side stronger. And certainly you've seen commodities really take off, and it's both demand side spurred by infrastructure spend and fiscal stimulus and monetary stimulus and so on and so forth. But it's also spurred somewhat by the supply side in terms of supply has been impacted there. But you've seen, oil go from $20 or $30 to $60. You've seen copper come from $2 to $4. You've got zinc from 80 cents to $1.30. And iron ore. I mean, iron ore is heading to the moon. It's come from $30 or $40 to $170, for goodness sake. So that's telling you that people are going to be looking for more and more of those commodities. Just going back to the COVID impact. Remember, I mean, in a way, we've been a bit lucky in the mining industry. I mean, we are remote operations generally, so therefore, you don't have the close connectivity that you do in the city in respect of a pandemic. And also, mining operations are always ready for this type of emergency, right? The occupational health and safety system, policies, procedures at mine sites. So you're always ready for this sort of thing, right? So therefore, we have been less impacted. Now, we've been impacted, of course, with the roster system and getting people here and there and getting goods here and there and so on and so forth. But we've been operating definitely at north of 75% capacity, right? Better than being in the travel and some of those sort of retail-facing industries. Just terrible. They've all been sort of smashed in a way. Hopefully they'll come back. But we've actually been less impacted. Definitely impact there, but really in good shape and now getting ready for what is this new wave, if you like. And I suppose, Jamie, your question there in terms of, well, has the future been brought forward? Has it been brought forward for metals? Is there a greater focus on the commodity side? Absolutely no question about it. And taking copper as a very good example, and you mentioned, communications and so on and so forth, taking copper, not only are you going to get all of the demand factors there for copper, which have been very strong anyway, it's got multiple uses, it's now got this extra burst, this extra spurt of growth in respect of the whole renewables, EV, battery metals revolution that's occurring, and there's not one forecaster, not one broker that isn't now putting out, greater growth, demand growth forecasts for copper and the other battery metals, including cobalt and lithium and graphite and nickel, of course, and so on and so forth. So that's we see that obviously as a very positive thing for the industry, Jamie.
So I have a lot of questions back in between there, but I'm going to skip ahead because you touched on something that I really want to talk about, and sort of this importance of battery metals and copper in the sort of electrification of the world, and what we're kind of calling this sort of the green energy revolution.
Yes.
And when I sort of think about this historically, when you look at energy versus mining, you have sort of material versus energy, and energy tends to be as a market, an order of magnitude bigger than mining and more valuable in the world. But the way things are changing, mining is in a weird situation right now where a lot of things that were kind of mining products are now also energy products. When you look at, the essentiality of battery storage and things like lithium, things like copper, things like nickel, the line is kind of blurred, I think now. And do you think the size and the value of this portion of the industry is going to reflect that, sort of these energy valuations? Do you think we're going to see massive runs in copper, in nickel, in these essential minerals and metals?
Definitely. So couldn't agree more. And you're starting to see the beginning of it right now. There's no question in the whole, how do you put it, the whole decarbonisation, if you like, whether it's the replacement of met coal, in blast furnaces. These things are actually going to take a very, very long time. No question about that. There's going to be transition. It's a bit like the whole coal equation, whether it's thermal coal or met coal. It's going to, yes, the transition is on, so there's no question about that. It is going to happen, but it's going to take some time. And the winners there, of course, are going to be as you say, the battery metals and electrification and so on. So the world is going to continue to electrify, no question about that, right? And it's going to continue to have this massive communications revolution. So no question about that. And you need all of those metals and materials to do that. Also, Jamie, see, we look at all of this in the context of, well, what is the future for these commodities, that have just taken on in a way, a bit of a new burst. Now, we see that you're going to see multiple decades of continued growth. You've got, it's led by China, other parts of Asia, India, rest of the developing world. They're all looking to get onto that superhighway of economic growth and prosperity. And your business, the communications business, has really given that a spurt over the past 20 or 30 years. People know what's going on around the world.
Mm-hmm.
They want to be involved. They want to improve, and so that's what's happening. And the winners in all of that, are going to be those metals that we're talking about, because you continue to need steel for infrastructure. You continue to need it for further development and so on. And you continue to need copper and all of those things that we've just talked about for all of those, that great, rebuild and so on. Now, it doesn't mean, Jamie, that you're not going to have humps and bumps and troughs and so on along the way here.
Yeah.
Right? We went through one 10 years ago with the GFC. We've just been through one with COVID. So they will come and go, no question about that. But the direction and the force, as far as we're concerned, are perfectly clear.
Well, an interesting sort of analog to that is I was reading the other day how the transition from firewood to coal took about 100 years in Europe before coal replaced firewood as like the primary source of heat at the time. And I think it's going to happen a lot faster than 100 years for us. But, I think people who think coking coal and even thermal coal and oil and gas are going to turn off tomorrow night or next year or even in the next decade are probably jumping the gun a little bit on that one as well.
Definitely. A lot of work going on, no question. But as I say, the direction and the force are clear. Right? That is now abundantly clear. The trend is there and it's gathering pace. So, and there's so much work going on, so much research going on, and so on and so forth. We've got decarb is coming at us, right? So there's no worries about that. It's all part of that whole ESG focus and so on and so forth, and we are responding to that. And in a way, we've been at it for some time in terms of the way we continue to improve our business. But business will respond and is responding, to all of that.
So I want to talk about that, how EMR is responding to that, how it's changed your focus. But I think for people at home, it would go a long way for us to define, what is private equity and how is it work specifically within the mining sector? Because often it's a little bit different than you might see in other sectors. Do you have a broad definition of private equity for people?
Well, yes, I suppose we do in a way. I mean, it's different from public equity in the sense that we tend to be not listed.
Mm-hmm.
So the public equity markets, you've got the BHPs all the way through to the junior guys in our space. So we tend to be private, and we prefer to have private companies. It doesn't mean you won't list them eventually, IPO them and all of that sort of thing, but you start out private. That's one thing. The second thing, and there are a number of private equity firms in the mining space, not too many. One of the reasons is that the industry is, as you know, somewhat volatile, so things go up and down a bit,
Yeah.
And the other reason is that private equity tends to be a sort of 10 to 12 to 15 year money, as opposed to building BHP and other companies is what we've done in the past. You're going forever, right? So the future's sort of not limited from that perspective. In private equity, it is, because our investors, trust us with their commitment for a 10 to 15 year fund. So you're limited limited by that. So, and in the mining space, as getting projects, finding projects, developing them up, getting them permitted, getting them into production can take a long time. So therefore, you don't have too much room from that perspective. So it is. There's not that many of them. We're a little bit different in the sense that we're control people. We like to be in charge. We've gone to a lot of trouble to put together really, really good people with long, strong, deep operational experience and background. So we've gone to that trouble. So say we're not control people because we're pathological control freaks. We're control people because we've got the experience and so on. And you really have to be in the on the field or in the coach's box to optimize your investors' returns.
And that's something I wanted to ask you about because looking at this from the outside, I've seen you guys. You're often buying projects, buying mines outright, owning them 100%, operating or building them out privately. Many private equity firms in the mining and resource space, some of your competitors that people will know, they seem to utilize a hybrid model where often they'll own 30, 40, 70% of a company that's publicly listed. It has sometimes other funds in, sometimes retail investors, some combination of the two. Do you have a feel for what works best? I've seen, particularly in the downturns, it's quite challenging. It looks from the outside to me for private equity firms who own a portion of a publicly listed company that's getting beaten up on the market and it's getting no love, and investors are selling, and you can't bring in other investors because it's hard when one group owns so much. Do you guys do any of that hybrid model, or are you purely private focused, own 100%, et cetera?
Well, it's we do hybrid in the sense of we do have 50-50 partners, for example. Mm-hmm. We do have other partners. So, of course, we've got our own investors, our own LPs, but then the group of people that we have worked with and invested with over a period of time, so sort of co-investor types. And the hybrid with some in the public market. I mean, it's a bit hard to avoid the public equity markets because most of the mining companies are listed one way or the other. Yeah. So, of course, you can get involved and delist them, I suppose, or take out the whole company. We prefer to actually put the money into the ground and develop it rather than take companies out. So, look, it's a little bit on the horses for courses side, Jamie. One of the things about PE is that you must be absolutely vigilant and diligent and focused on the work that you do in the due diligence side. In other words, when you actually in your pipeline, you must work so hard in there to make sure that you get everything right, or as many things right as absolutely possible, because you're not BHP, you're not Rio Tinto. You can't have a bad performer hiding behind a good performer. You're sort of naked here with each of those investments, a little bit silo style. So they must have the tons, they must have the grade. You must have the right people, must be in the right location. So you've got to be absolutely rigorous about that. And that is something that's why we need, Jamie. That's why we need people who've had that experience, who've and the scars to prove it, to ensure that you're actually going to do it. Now, the rewards, of course, can be spectacular, but the work has to go in a very vigorous and rigorous way at the very beginning, if that makes sense to you.
Yes, it does. And when you talk about the importance of having the right people, what do these people mean? Are these people that are technical professionals that have spent decades working on mine sites or in big companies, actually sort of building and operating assets on the ground? Or who do you look for to build out your team?
Yes. Well, all of the above, all of those people. But again, one of the things I feel a bit lucky about is that having been in it for some time, having worked at the big end of town, having worked at the small end of town, now having worked in PE, and all the while talking with investors, all the while working with a whole range of different people, not only within our own organisation, but outside the organisation in terms of contractors and suppliers and advisors and consultants and so on and so forth. So between myself and Tony Manini and Jason and the rest of the team here, the senior team at EMR Capital got terrific networks, whether they be individuals or advisors, consultants, and so on. And so we're lucky to be able to do that and bring all of those people together. So we think that we think that that gives us very significant advantage when it comes to PE, when it comes to improvement on our particular model, Jamie. So when you say what do you look for? Well, we look for background, we look for experience, we look for people who equally focused with the strong culture of focus on getting the job in hand type of thing. That's what we look for.
Okay. And you mentioned you'd worked at the big end of town places like Rio. You've started a junior company and built it. How do you evaluate and choose assets that you want to buy or invest in differently when you're running a mining company and operating mining company versus a private equity firm? Is it the same thing? Is it a different methodology? How does that differ?
Yeah. Well, it's much the same, but as I say, with PE, you have to be absolutely singularly focused. So you've got to do that, and you don't have stock to work with. So you're not a gold company or a listed company that's actually got shares that can use as a currency as opposed to cash. So your precious shareholders' funds are going to be applied in this acquisition. So not currency type of thing. Okay, so we have a very clear model, Jamie, when we're going in. We're what we call the rule of 8, right? It must have the tons, it must have the grade, it must have a conventional process, it must have quality, it must have long life, low cost, lots of upside, and be in a stable and secure domain. So it must have all of those things, or you're going to be able to convert it, in some of those areas where it might not have it to begin with, type of thing. So, so we use that rigorous model, and then once we make an acquisition, the clock starts ticking. So you have to be absolutely rigorous in terms of the way in which you're going to make the improvements, because at the end of the day, you have to go. So that's different to the BHPs, the Rio Tintos, and Oxiana, because you've got to get in, make your acquisition, do your work, and then you've ultimately got to go from there, whether you go in one fell swoop or you transmigrate gradually over a period of time by an IPO or something like that. But that's a key difference to company building people, if you like.
Yeah, I guess the clock's ticking much faster in that respect.
Yes, yeah, faster for me too.
So a lot of people who are going to be listening to this are not in private equity. They don't work for mining companies. They're investors at home that have an interest in mining stocks. You just mentioned these 8 factors, sort of grade, tonnage, jurisdiction.
Yeah.
Are these the sort of things that they should be considering too, that I should be considering when I'm buying a stock just in my personal account? Or does it differ very greatly? Would you say that these are things that any mining investor should be thinking of?
Well, they should be, but the key, number of keys, I suppose. I mean, the sort of things that we've just been talking about, tons and grade and so on and so forth, they're technical, they're visible, and so on. What you're actually looking for, you're looking for people who've actually, been there before, done it before, had success. So you're looking for the folks there that you can trust, whether they've got the grey hair or the no hair or whatever it happens to be, type of thing. But you're also looking for inside a company. It's a bit harder to identify, but you're looking for a very, very strong culture here. You're looking for a culture of success and sustainability. Right? So you want people in this industry that have got ingrained into their into your systems, policies, and procedures, and into the individual's behavior and performance, a very, very strong culture of sustainable performance. That's what you're looking for. You're not looking for a one-hit wonder here. You're looking for people who are going to build businesses that are going to go forever, whether they're PE or separate companies, because ultimately you want to create a business in PE that will go on for a very, very long time. And to actually ensure, to guarantee sustainability, you have to have not only all those physical things that we're talking about in terms of tons of grade and process and so on, but you have to have that strong culture of focus, of involvement, of inclusiveness, so that you mentioned a bit earlier people working together in teams. that is the most powerful thing. One of the most powerful lessons that I've ever learned, really. It's all right for me to bang on about this and bang on about that, but we're nothing without being able to work with other people. That's where you draw, a serious performance and serious success from. Whether it's just the people within our own sort of leadership group, whether it's the people within our own companies and so on, or other stakeholders in the business, whether they're the consumers, the suppliers and customers and so on. And most importantly, Jamie, the people that are in the valley, that are in the community, that are in the province where you work, right? Because we're not a pop-up sort of McDonald's store down the street here, right, in Vancouver or Melbourne. We are working out in remote communities. That's what we're doing, and we're changing, in some cases, changing people's lives forever. So therefore, to have sustainability, to have success, to have a long-term competitive business, you must have that very, very close relationship, confidence, trust, cooperation of all of those people. So you must actually understand that you are nothing without that.
And when you talk about sustainable performance, is there a way to, if not fully evaluate that, get an idea for it from the outside? If you're an investor that can't go and tour the head office or the mine sites, if you're reading about these things, and what's the best way for someone to do that? Is it look at someone's past performance? Is there any other things you can do that help to get an idea of what's kind of going on behind the scenes and whether they have this culture and an ability in place to actually deliver the results you're hoping for?
Look, I think so. I mean, apart from the annual report and the sustainability report and calling your broker and reading all of the information, one of the things that we look for when we're looking at investing is people. You want people who are going to be completely open, transparent, and honest with you, right? One of the things, and your business has shown us, enabled us to do that, right? The whole communications revolution, nothing is a secret anymore, right? So all of this information is available. So you want people who are riding that wave, right? Who are saying, we've got to get the communications out. We've got to be transparent. We're not being transparent because the regulator told us to be transparent. We're being transparent because it helps us so much, right? It builds trust. It builds trust and it builds respect, not only within your own family group, if you like, but it builds trust and respect out amongst all of those stakeholders. So they're the sort of things you want, so somebody can, if they fire me through an email, for example, we're very happy. We must answer it, so anytime any of that sort of thing happens, the great communicators in our business, fabulous communicators, people like Robert Friedland, people like Andrew Forrest and so on. One of the reasons they've been successful is that they are great communicators, right? They're the master blasters of communication, to use a cricketing term. Viv Richards was the master blaster.
Yeah.
These guys are the actual master blasters of communication. So I'm very happy to follow that.
You mentioned Andrew Forrester. He's the chairman of Fortescue. At one point, you were the vice chairman there. Is that correct?
Yes, that's correct.
So that is not a role we see often in Canadian companies. What is the role of vice chairman in a company, a big, multi-billion-dollar major company like Fortescue?
Well, I suppose it's a bit of a recognition of seniority, age, respect for age. That's one thing. Another is, I suppose, duration, as opposed to enduring. Duration in terms of I'd been there a bit longer than some of the others. But also there are times when Andrew, as the chairman, of course, Andrew's a chairman and major owner driver.
Yes.
So from time to time he's got to step out of the room, out of the meeting, and so on and so forth. So you need vice chairman to come in and take over that sort of position. And the chairman from time to time will deputise to the vice chairman to either run a meeting, do this or do that type of thing. So it's a sort of like a vice captain in footy, if you like.
And you mentioned Andrew was one of these sort of master communicators and his ability to lean into transparency. What did you pick up from someone like that who built this such a major company, is still at the helm of it? He's still pretty young. What is he doing differently that's allowed him to do that over all these years that the average mining CEO or chairman is not doing, that many of his competitors haven't figured out?
Yes, yes. Well, I mean, he's a great mining entrepreneur.
Mm-hmm.
He's a great Australian, and he's a great bloke. One of the keys with the success of Fortescue has been that terrific persistence. In other words, the drive, the persistence to get it done, and just sheer hard work and perseverance, really, by Andrew. And very importantly, he actually engenders that, or I found that was engendered in the whole of the team, whether it was the board, senior management group, the whole company, and singular focus. This is what we are going to do. This is the vision. This is the set of strategic objectives. This is the plan. This is how we're going to get there. And this is the glue. This is the culture, a very, very powerful culture of persistence, of perseverance, of openness, honesty, transparency, going for these goals.
And the reason I brought this up is because Fortescue recently announced they're going to be basically transitioning to renewable power, right? I think they're starting with their iron ore operations. I mean, this is a massive undertaking for a company that's made so much of their money in the mining space. Can you talk a little bit about that? Because I don't see any other mining companies doing anything resembling this level of ambition.
Yeah, well, look, I can't talk to you about FMG type of thing because I'm no longer there in any detail. But there's no question that that Andrew and FMG are playing a leadership role there in the whole decarbonisation narrative. But it's more than narrative. Obviously, it's happening and it's coming, and there's a terrific amount of research going on there. So and you see more and more. I mean, Jamie, you don't want me to bang on about all this, but you've got the ICCM, the International Council of Commodities and Mining, and so on and so forth. They've got a suite of rules and principles and practices and so on when it comes to climate change, decarb, and so on and so forth. So no worries there. You've got Australian Mining Council. You'll have the various Canadian bodies and so on. So it's pretty much all within there. Then you come to they're the principles, policies, procedures from the groups, if you like, and they follow World Bank policies, International Finance Corporation, and so on and so forth. Very good people in there. We've been working on that for a very long period of time, and we've been working on it for a long period of time too. Then you come to the individual companies, and you're seeing more and more people now say, well, we're going to be carbon neutral by 2050, or it's whether the big companies, small companies, and so on and so forth, 2030 or 2035 or whatever it happens to be. A lot of it is to do with energy efficiency. A lot of it is to do with automation, robotics, and saving, saving energy. I mean, we go back 10 or 20 years, and $110 oil will drive you to becoming more energy efficient. Mm-hmm. So a lot of that is a continuation of a lot of that improvement and technology that we actually adopted. I have described it in the last 20 years as a technical and technological revolution there in mining with respect to automation, robotics, and energy efficiency, and it's continuing. It has to continue, right? And now we're here are the standards. It's 2050. It's Paris. It's decarb. It's this and that. So we're driving to that, but we know how to do it, right? We've got the resources. We've got the capability. We've got the technology is being developed to be able to do all those things. So it's not as if we're jumping on a bandwagon here. It's something that we're doing, and we're going to have to keep doing it.
And that's a little bit what I actually wanted to talk about, because Fortescue is obviously leading the charge on this, but I wonder, are we going to be seeing this trickle down throughout the industry? And you're in a position where you're dealing often with some of the biggest capital allocators in the world, right? The big pension funds and the university endowments and the people that put large checks of money into private equity firms. And without getting into any specifics, but are you seeing a shift in priority amongst those capital allocators that yes, ESG, yes, carbon neutral, yes, energy efficiency? Is that something that they're starting to demand on this space?
Yeah, well, definitely. The dial is being turned up,
Mm-hmm.
and all the people that we deal with in terms of, as you say, the capital allocators, they've got an investment committee, they've got boards that they're answering to, and so on and so forth. So there's no question the dial is being turned up there. Having said that, our record in terms of ESG, the whole environmental management area, is a very good one. Our record in terms of governance is a very good one, and the mining industry has actually done terrific work in improving their environmental performance. They've done terrific work in improving their governance performance with the ASX listed rules, TSX listed rules, the regulator generally, openness, transparency, and so on. So from a governance perspective, it's a very good record, and from a social perspective, it's a very good record. So it's not as if suddenly we have to start doing this stuff. We've actually been doing it for some time. Now the dial needs to be turned up. There's no question about that. You have to show, demonstrate, commit to doing these sorts of things by a certain time. So that's coming as well. But we're up for it. We're ready for it. So we've got the capability to be able to do it.
Okay. All right.
We think.
Okay. We've spoken a lot about the future. I actually want to take a step back and talk a little bit about company building. You've been heavily involved in building two companies that I'm familiar with, Oxiana, Tiger's Realm. Oxiana, you said earlier, went from a small, multi-million-dollar company to a several billion-dollar company in a relatively short time frame. There are very, very few companies that make that jump ever. Especially here in Canada, I find even the successful junior explorers or developers typically end up getting bought. So, in your opinion, in your experience, what differentiates a junior company that gets bought, even if they do find exploration success or development success, to one that is able to make that leap into a producer, into a growing company? Are there some characteristics? Is it just the asset? Is it just the luck of the cycle? Who can make that leap and who can't?
Yeah. Well, look, a good question in the sense of there are no specifics, I suppose. It's a little bit horses for courses there.
Mm-hmm.
I mean, when we started to grow the Ox, we weren't interested in in just simple exploration success, and now it's somebody else's turn. In other words, we'd put people together there that were capable of taking things all the way through. In other words, you've got a good exploration team, you've got good building team, and a good operating team. So in other words, it was our objective from the very beginning to convert to an Australia, Asia Pacific explorer, developer, producer. So that from the very beginning, that's what we wanted to do. I mean, if you get offers that you can't refuse along the way, then that's fine too. But some people at the other extreme, Jamie, good exploration people, their objective is to make the discovery and then go.
Mm-hmm.
And so they go, somebody else's turn to develop it, because that's not their expertise. So they then would like to go and then do another one somewhere, So the junior exploration group, there's a lot of those, but then you get to some of the mid-tier producers and so on, and that's where you see more of those people get all the way through, or as far as they possibly can. Right now, actually, you're quite right. There's been a lot of absorption going on over the past 20 years. For example, in copper, you can't find, some of these mid-tier copper producers. You got the big guys. How are you going to invest in copper? You got Rio Tinto, BHP, Glencore, Anto, Teck, Freeport, and some of these guys, right? But then where do you go next? Not that many there. So that's something that hasn't been lost on us, because we do have copper assets inside our EMR group. So that's something that we're looking at right now.
So, a lot of people who listen to this podcast are people, young people within the mining space. A lot of them would love to build a company someday. A lot of them have the ambitions to build operating companies. Is there something if you're just a guy right now, maybe you're an accountant, maybe you're an engineer, maybe you're just an entrepreneur, you've got a dream of doing this someday. Are there some things that they should be keeping in mind in terms of starting this, in terms of, what stage of assets should they be looking at? How do they build this sort of team of professionals? What are the, I know I'm massively oversimplifying this process, but what are the sort of the pillars that really need to stand out?
Yeah. Okay. Well, look, just a couple of things. First of all, my advice to people who've survived this chat so far, the younger people, is look very closely at this industry, because it's a wonderful, wonderful industry, and it's got a fabulous future, absolutely fabulous. To say we're in for multiple decades of good, strong commodity growth, inevitably, unbridled, humps and bumps along the way, and it's a very exciting industry. It's international, it's scientific, it's commercial, it's got all of those things associated with it. So it's something people, we need more people in the industry, right? Committed and devoted to it, whether it's at the technical end or whether it's at the financial end, the commercial end, research end, and so on. We need more and more people in the industry. Okay, so that's one thing. But to actually to build your business, to do the entrepreneurial thing, if you like. I mean, it's not everybody's cup of tea. People obviously some are happy to go through a very successful and rewarding career inside a bigger company, smaller company, and so on and so forth, or a bank for that matter, or a research group in the mineral space. You see plenty of those people. So very, very good people, and I've met so many of them. But to actually, if people are bent on getting, putting assets together and then developing them, listing them, and growing a business in the same way that people like Robert Friedland and Andrew Forrest and various others have actually done over a period of time. The best way to do that is get good experience at the big end of town. As I say, I was very lucky. I started at the big end of town, then went to the small end of town, where you do everything yourself, type of thing. So it was a fabulous experience, and it really gives you good grounding, right? So you know what goes on in the big end. So you learn the discipline, you learn all of the things about the business, and then at the small end of town, you learn how to survive, day after day.
Yeah.
And that's so important to be able to have that, and working with the people. I mean, I'm very lucky, again, Jamie, to have worked with people in Rio Tinto. I'm still working with them. Work with people in Oxiana, still working with them. Working with people inside EMR Capital. I feel so lucky to be able to have that great capability surrounding me.
Okay.
I'm propped up by them completely.
Yeah. Okay. All right. So how many people from EMR have you worked with since the Rio Tinto days? Is there many in there from that?
Oh yeah,
that have come all the way through.
Tony, yeah, they've come all the way through. More or less. So, Tony and Tony Manini, Jason Chang, Robbie Burns, Ian Smith, all of these people, and again, just to feel lucky and humble, actually, right, to have the experience of working with those guys. So it's been a very good continuum, and that's so important in our business, because it is, as I say, it's technical, it's commercial, it's financial, it's big, it's volatile, it's remote, so it's got risk associated with it. So that always gets a run. So you do need that quality people.
You mentioned earlier one of the pillars you look for in investment is a stable jurisdiction.
Yes.
But in previous companies you've worked with and built, you've worked in some challenging jurisdictions. You've worked throughout Asia. You've worked in Russia, I believe, with Tiger's Realm. What is your view on sort of, from an entrepreneurial perspective, let's look at it this way, from sort of frontier jurisdictions and the geological opportunities that exist there versus stable jurisdictions where maybe the geology has been a little more picked over, but you have very defined rules and laws and regulations and all the things that make operating in life a little more simpler. What do you think about that? Should a certain type of person be doing one or the other? Do you want to only be focused on stable jurisdictions now? How do you weigh that math in your mind when you're looking at an investment opportunity?
Well, look, again, good question, and it could be long answer, but the briefs of it, I suppose, are first of all, you have to go where the ore bodies are. So it's a geological thing from that perspective. So you must go to various places. You want to see some mining background there, for example. You'd like to see sort of mining friendly jurisdictions. You like countries with infrastructure. You like countries with good quality, technically qualified people, and as you say, the stability, right? You need to see stability there in terms of rules and regulations. Now, it doesn't matter whether you're operating in Queensland or Victoria or Western Australia or Zambia or Indonesia and so on. The governments come and go a bit, and when they're short and you're making some money, you can rest assured they're going to put the bite on you for something or other, whether it's a further tax or it's only a surtax and it won't last very long, or increased royalty or something or other. So that's going to happen to you anyway, wherever you are. But you're okay with that, right? At the end of the day, you're one of your stakeholders. So, it's very important to make sure that they are, they're happy in the business as well. So from that perspective, I think that you need to develop up the relationship. You mentioned Laos and the Lao People's Democratic Republic there. I mean, small country, not much mining, very good project, very good project there at Sepon. We spent a lot of time working with the government. We spent a lot of time working with the provincial community. We spent a lot of time working with the local communities, and we won their support. Most important was winning the support of the people on the ground, because once you've got that, you'll get the provincial support. And once you've got that, you'll get the national support. So if you've got the support, the cooperation, the respect, the understanding of the people there, that's what I say, a stable, and workable system or a regime. So that means you talk about trickle down. That means you really got to get on the ground. Can you work with the people on the ground? Can you build trust, respect, confidence, and so on? Once you're satisfied you can do that, then we believe you can build a successful and sustainable competitive business. So what do you look for? You look for all of those things that we talked about. You mentioned Russia, Laos, we've got Zambia, Australia. So we try to be in sort of well recognized. And again, it's not just up to us. Our American investors, for example, and various co-investors that we've got. The banks have got a view about all of that as well. There's certain places that they won't go. So, got to take all of those sorts of things into account. Right now, we're in Zambia, we're in Spain, we're in the UK, we're in Australia, and we're in America. Love to be in Canada. Jamie, if you've got something up there in Canada for us to have a look at, we'd be very happy to come up.
Well, maybe we should have a conversation after this after this recording. And, there's a few entrepreneurs, though, that are consistently able to get things done in places that nobody else seems to. I think of the Lundin Group in Sudan. I think of Robert Friedland in Mongolia and the Congo. Is there something you see these guys doing that few others are able to replicate? Is it this engaging with governments and communities? Is it simply, really immense access to capital? Is there some secret sauce that they're doing that nobody else seems to get? I know I'm grasping at straws here, but it always boggles my mind that there's only ever a few people that can sort of consistently pull off these jurisdictional Hail Marys, so to speak.
Yes. Very good. The thing is, you must have the ore body, the deposit. So you must be sufficiently visionary to actually understand that this is going to be a very significant ore body, very significant long-term, sustainable, competitive business, right? So that was recognised by Robert in Mongolia, and recognised by Robert again in the DRC. Andrew in the Pilbara, Andrew for the Pilbara with FMG. So you've got to have that. You got to have that secret sauce, to understand it. And then, of course, the next big part of it is actually, working. Just you. Don't send anybody else. They want to see you. They want to see the the person in charge here, right? So you can't, whether it's the Prime Minister or the people in the mines department or the people on the ground in the province or the leaders of the community, they want to see you, and that's a very big difference with people like Robert, Andrew, myself, and various others that we know of, that they actually get out there and they build that trust and confidence all the way through the jurisdiction, and able to get there at a moment's notice if there's a problem, right? You just have to go, right?
Mm-hmm.
Where is he? He was supposed to be here at 9 o'clock this morning. Well, he's on site in the rainforest of North Sumatra because they needed to see him.
Yeah.
The chief wanted to talk to him, so that's where he is right now. So.
Okay. All right, Owen. We've been at this for almost an hour now. I really appreciate your time. If it's okay with you, I'm going to ask you a couple of sort of rapid fire questions for short questions. Can be short or long answers, however you think. But they're going to be somewhat fun questions. Luck plays a big role in the mining space. How do you get lucky in mining?
Yep. The Gary Player answer, which is, the more I practice, the luckier I get, type of thing. So you just got to keep doing it, and you've actually got to have your eye. You mentioned the future, right? Future facing. You've got to have your eye on the future all the time, Jamie. Whether it's the decarb or whether it's EV or whether it's the renewables and so on and so forth, you must be there because it takes supply chains take a long time. So you need to position yourself early.
Okay. What advice do you have for people in the space? Maybe they've graduated from university, maybe they're working for a big company, whatever, but they want to keep learning, they want to keep building their career. What should they be doing? Conferences, books, whatever. What do you recommend?
Yeah. All of those things, all of the technical stuff that people in those professions do, no worries. Stay with it in terms of the mining business, and some of the things that I've been so lucky with in my career, if you can call it that, is to work with wonderful, wonderful people at Rio Tinto and actually understand that, respect it, and be humble. So you've got to be able to do that, and you've got to have you've got to sharpen the saw, as Stephen Covey would say. The seven habits, and then the eighth habit. Built to last, and all of these things. Got to pick up all of those things. We remember. You're too young to remember In Search of Excellence. That was a bit of a master blaster book in terms of what made excellent companies. So you've got to look at all of those sort of things and absorb it all. But ultimately, you've got to come with a model. You must have a model. You must have a model that says this is how we're going to do this stuff, right? Whether it's our rule of 8. Whether it's your sort of moral and ethical compass as part of your rule of 8, you must have a model and you must stick with that model.
Okay. Is there anything you see, actually, let me frame this a better way. Is there any advice you constantly see given in the mining space that you actually think is bad advice?
Well, look, because you've got volatility, right, in the market. But if you've done your work well, then you're true to your model. You do have the tons, you do have the grade, and you do have that absolute conviction that it is going to be long-term competitive. You must stay with it. You must stay with it. You must be persistent. You must persevere. You must stick it out, even though you got the humps and the bumps. Whether it was a GFC, whether it's COVID, whether it's some other interruption, hump or bump along the way type of thing, because you're looking for a long term. Stay with that vision, stay with the project. If you've done enough work to demonstrate to yourself and all of those people who surround you that this is the thing for us, you must stay with it, because you're going to get, you've got people be chasing you, right? The people will always be trying to take it away from you, one way or the other. So, you must absolutely stay with it.
All right, last one. Is there anything that you believe that your peers in the space or otherwise think is crazy? Maybe about the future, about the space, that other people think is, kind of a wild idea or vision, but that you're convinced of?
Look, I don't think so. I think we've got a lot of people. What we do here is all of those things that I've described. and it's a highly competitive business. There's no question about that. We're up for that. I mean, we're all the same, really. We're up for that, So, but I don't think anybody is out there saying, well, what these guys are doing is absolutely bloody wrong,
Yeah.
So I think private equity is a bit different in mining. There's more private equity in sort of hamburger shops than there is in mining, because of those things that I mentioned, the time frame, the volatility, highly technical, remote locations, and so on and so forth. So people will say, well, maybe a few people say, what are they doing that for? Well, we're doing it because we know we can do it. We know we can be successful. There's not that many people in the space, and we know that we've got a model that we can get in and we can get out. And you've got to be able to pick winners, Jamie. You've got to be able to pick winners. And the best way to pick winners is know your subject so well, and therefore, because you can't afford to, as I said, you're not BHP, that you can hide a bad performer behind a good performer, or, a big company like that. So you're a bit naked in the PE world. So you've got to be absolutely rigorous to make sure you got the right asset and the right people.
All right.
And do the right interviews with great communicators.
I think we nailed that on this one. I think we got that one right. So, Owen, really, thank you so much for taking the time out of your day. I know you're busy. This has been really, really valuable for me. Very much appreciated.
Good on you.
Is there anything I didn't ask that I should have asked? Anything you'd like to say to the audience that I forgot about, or you'd like to comment on?
Not really. I mean, I do enjoy it, and anytime people are interested in, follow-ups or questions, what did he say? Does he really mean that? Then happy to follow up. Just remember, it is the Chinese New Year of the metal ox, the mighty metal ox. So it's going to be a great year for metals, Jamie.
Yeah, and I'm actually an ox from 1985, so I think it's going to be an even better year for me, hopefully.
Even better.
All right.
Great to talk to you.
My pleasure. Thank you very much, Owen.
All the best.